people would rather talk about bowel movements than talk about money. And so I think that's like part of the issue is no one wants to talk about it. There's no art that's ever made about finance or economics, even though like there's so much beauty in it. It's philosophy, but with money. The economy is just a series of human interactions, and I think that's like really lovely. We leave so many people out because we make it so intangible.
From the news team at LinkedIn, I'm Jessi Hempel, and this is Hello Monday. It's our show about the changing nature of work and how that work is changing all of us. There's only one class that I flat out failed in college. It was economics. I was mired in these textbooks with terms like elasticity and market efficiency, and they just didn't really mean anything to me. It wasn't until years later when I got into business reporting that I started to get it. Economics is really just all about people. It's about how we get the things we want, how we get the things we need, and why we sometimes don't. That's why I'm so excited to introduce you to today's guest. We have in the studio the economist and finance creator, Kyla Scanlon. Now, Kyla had a book out not so long ago. It was called In This Economy, How Money and Markets Really Work. She's so thoughtful about the structure of these things. What's more, Kyla speaks to a generation of 20-somethings, people who have come up in a very different world than I do, a world that works differently. She's got great analysis, and she recognizes trends that feel like they describe so much of what I experience today, so much of what I hope you experience today. Here's Kyla Scanlon.
The economy is the movement of goods and services, but the way that I like to talk about it to center people a little bit more into it is people doing different transactions, right? So it's people buying cups of coffee, it's people going to work, it's people driving cars. So at the base level, it's goods and services moving around, but that's all driven by people.
You specifically sort of came to my mind when you used this word to describe a lot of what was going on in the economy, this idea of a vibe, right? You talk about vibes all the time. What do you mean by vibes?
So vibes is just shorthand for consumer sentiment. It's just how people feel about the economy, how they feel about their economic circumstances. It's very similar to Keynes and animal spirits, where people's emotions drive markets. And then it's very similar to George Soros in reflexivity, where people's emotions can drive prices.
I think that one thing that you do a good job of demystifying to the extent that we can, but maybe it's just a mystery, is why it has been true that in the last few years, there has been a massive gap between what we read and hear about how the economy is doing and how many of us actually feel. I guess that's the vibes part.
Yeah, that's the vibe session. So that's the disconnect between consumer sentiment and economic data. And this is a really tough topic. Like, okay, so we have all this economic data that's telling us that things are okay. But if you go and talk to a friend, they're like, I'm not feeling good. Are you feeling good?
Right.
And so that disconnect is the vibe session, right? The vibes are in a recession. And part of that is structural affordability, right? Like housing is extraordinarily expensive. Childcare costs are through the roof. Elder care costs are really high. There's an entire generation of people that are called the sandwich generation because they're dealing with aging parents and then also dealing with like trying to raise their kids. So they have.
Are you talking to me?
I mean,
my elderly, my parents, and my 5-year-old.
Yeah. But that's not really captured in economic data. Like that's not really captured in GDP. So that's part of the issue with the vibe session is like there are real reasons why people feel bad, even though the economic data is saying that things are okay. There's also issues with media headlines to negative sentiment.
Well, I just want to stay on this a second, Kyla, because I do think that you are right, that there are these structural issues that feel much more significant than the issues economically that my parents seem to face. And by the way, I'm in my 40s. For people coming up beyond me, things like buying a house seem almost like just off the table. And yet, humans also have a negativity bias. We really just think things are bad all the time, even when they're not so bad. Yeah. So how do we get to the truth of how things are?
Yeah, no, we feel losses, I think, 2 times worse than wins. And I think that's the tough part about getting to the truth of where things are, because The economy is so personal, and that's why it's really hard to talk about it, because every time that you talk about it, you're talking in terms of averages or medians, and a person is like, well, I'm not an average or a median, right? That doesn't apply to me. And so
Right.
I think that's the tough part, is you have to communicate this really big idea. But in terms of normalizing the vibes, I suppose, a lot of it comes down to just addressing these structural affordability problems, to building more housing, to fixing the childcare crisis, to doing something about elder care, addressing the root cause of what's making people feel bad.
A lot of our listeners are people who are considering transitions in their careers, right? Either they have been laid off and never expected to be laid off, but now it just seems to be like something that you come to expect in a career and they need to reinvent themselves. Or more likely, they're in a job where they're not really happy and they're thinking about making a change. Like, what questions should you be asking about the economy to determine both when is the right time to think about that and also what direction to go in?
No, the labor market's in an interesting spot right now. And so one way that we gauge labor market strength is through a metric called quits, which is the number of people that feel comfortable enough to quit their job and go pursue that passion. But now we're seeing less people quit, and we're seeing people who have been laid off have a harder time finding a job. So it's, if you have a job, you're like solid, but if you're looking for a job right now, it's tough. And so I think what people have to consider is the monetization of passions, and if that's something that they want to explore. But now that everything is so digital and AI can be used as a complement, I think there's a huge market opportunity for people to explore those passions if they choose to do so and reinvent themselves with that assistance.
So, what you're talking about really is thinking about next opportunities, not so much in terms of I'm going to quit and find a new employer, but I'm going to quit and turn to my new personal assistant AI and become my employer.
Yeah, like you don't have to follow the traditional 9 to 5. And I think a lot of people have fallen out of love with that because the employer has not maybe kept the same relationship with the employee that's been the case for like parents before us, right?
Right.
You have a 401k, you don't have a set pension
Right.
anymore. And
Right.
that's a little bit different, like having a 401k versus having a pension plan. There's not as much job security. People don't stay at the same places as long, as you pointed out.
Employment is more likely to be contract. It's more likely to be short term, to move around. It's as though the promises that corporations made to our grandparents have been broken so many times that they don't exist anymore by the time we get to your generation.
Yeah, absolutely. And I think that's why a lot of people are like, well, why would I, dedicate my life to a corporation? And I think they're good questions to be asking. What role does the corporation play in a life that can be entirely digital?
So I want to talk a little bit, Kyla, about your own background, how you came to be on my YouTube screen all the time, and increasingly on LinkedIn. I've been enjoying your videos on LinkedIn. So you grew up in Kentucky, right? And you studied economics and traced the path of your professional life from economics student to virtual teacher of millions.
So when I got to college, I didn't even know you could major in economics. Like I got there and I was like, oh, I'll be an engineer. And I had like traded options in high school. It just never connected for me that like you could do this as a living.
Wait, traded options in high school? I mean, I maybe you play clarinet in high school or you do cheerleading or I don't know, lacrosse, but trading options isn't something that my high school like offered as an extracurricular.
Yeah, it was so my dad like post 2008, that's kind of what he got into.
Sure.
And so I was like, oh, what's he doing? I want to hang out. And
That's
was
cool.
Like one way to hang out with him.
Yeah.
And so
totally.
it was he was like, you got to teach yourself, and so I did.
Yeah.
And it was really neat. Yeah.
And so you that was a passion or a hobby, and you went on to college and tripped into economics?
Yeah, kind of. I took it as a general education course.
Yeah.
And I went up to the teacher after and I was like, is this a major? And he was like, yeah. And so I ended up switching everything over and took on finance as well, did some data analytics. And then I went out to work for a company called Capital Group in Los Angeles. And so I made this really big move from Kentucky, where my job had been selling cars. And then I moved all the way out to LA to work for the buy side. But I graduated in 2019.
Right.
And so then the pandemic hit. And I think a lot of people had a similar experience experience to me during the pandemic where it was like, well, what am I passionate about? And for me, it was financial education. Like selling cars had been a really informative experience because, you're selling somebody a car and they don't even know what an interest rate is. And it's like, well, we have done this person a total disservice,
Yeah.
right? Like we're putting them on an 84-month car loan. Like they're underwater right now, right?
Right. And people don't have the basic language to be able to understand it. And frankly, if you don't have that language, it could also feel pretty intimidating.
Oh,
It's not like
absolutely.
anybody makes economics into. I mean, I actually always thought of it as akin to like learning like a foreign language. Like, am I going to study Chinese or economics in
Yeah.
school?
No, that's why I wrote that book because it does not need to be as complicated as it is.
Yeah.
Right? Like I think it's a bummer that we do this. Like economics is so fascinating and beautiful if we let it be, but like nobody likes talking about money. Money I have this I think it's a real stat in the book where it's like people would rather talk about bowel movements than talk about money. And so I think that's like part of the issue is no one wants to talk about it.
Right.
And so that goes back to like the car selling point is people it's you're dealing with people during an incredibly vulnerable moment.
Yeah.
They have to share with you, a stranger, their financial circumstances, their credit score. They know that you're trying to get one over on them because you're selling them something.
Right.
And that was really like I was like, okay, something has to be done here. And I kind of carried that with me all throughout Capital Group, built out the investment education arm for a startup, and then started making videos on social media about GameStop. And it just really resonated with people. And so now I'm here and it's been amazing.
When you
Yeah.
say it resonated with people, you have grown a huge following online. Who are those people? What do you know about them?
Yeah, so I recently did a survey with them and got to know a little bit more about them. It's a lot of young professionals, a lot of people who are either in college, recently graduated, or maybe in their mid to late 30s. And they are just very curious about the economy. Like they might be finance adjacent, like working in tech or working in sales, and they have some exposure to this language. They might
Right.
be actual financial professionals, or they might just be people like I have a lot of people who just stumbled onto this stuff and they're like, oh, okay, this makes sense. Like I get what this girl's saying. And I
Yeah.
really tried to make it fun early on. Like I would do skits and stuff. I would pretend to be Jerome Powell, who's the chair of the Federal Reserve.
That
I'd
was
put
a
on a
good
little
one.
suit. Yeah. That was kind of the start of everything. One thing that blows my mind about finance is there's no art that's ever made about finance or economics, even though like there's so much beauty in it. Like it's really just it's philosophy but with money. And so I wanted to try and make art about finance, which is what those skits were. And I just think that there's like we leave so many people out because we make it so intangible.
You have referenced several times in our conversation now this idea of beauty in these conversations. It's never a word that I had attached to these conversations. Pragmatism, duty,
Yeah.
those things make sense. Where's the beauty?
Well, I mean, I think the whole reason that the economy exists, the whole reason that money exists is like everything is interconnected. And it's interconnected because it's based on societal trust. Like we kind of have this cohesive nature that allows us to, go and pay $5 for a cup of coffee. And then we know that that coffee has beans that are grown here and there's labor that picked the beans and then there's a barista that sells it to you. And so like the economy is just a series of human interactions. And I think that's like really lovely. Like obviously there's real economic pain and that's the really tough part
Right.
about economics is like it's not easy for people.
Right.
Inflation has been hard, the labor market is hard, but at the bare bones, like what the economy represents, which is a cohesive society, is I think quite lovely.
Well, you talk about inflation being hard. You talk about the labor market having a sort of a different set of rules, or maybe business having a different set of rules than it did. What role does the economy have in preserving society?
It has a big role. Yeah, I think that this is something that's really tough, like going back to the structural affordability conversation. If people feel like they don't have a safety net underneath them, it's really tough to make big decisions. Like it's tough to go jump to your passion if you're like, I don't know what's going to happen. Like for me, like that was really hard. Like I have no idea. Like I have no safety net. I don't know what's going to happen. And I think the economy can exist as a foundation for people in a way that it doesn't now. Like there's this quote from Keynes, John Maynard Keynes, who coined animal spirits as well. I'm going to paraphrase, but like it's essentially like if the government can do it, they should. Like there is enough money for a lot of these projects.
Right.
And I think the economy has a duty to serve the people that exist within it.
Right.
So yeah, the economy is a foundation. It should be doing more for people than it is now, but it's complicated, right?
You say that, and I think about things like minimum wage and the stories we tell ourselves and the stories businesses tell about why it's such an intractable problem that if you pay people more, then businesses lose and then the economy loses. But in your book, you actually talk very insightfully about the fact that a lot of our assumptions deserve to be questioned about this, right?
Yeah, and I think now, the more that we go digital, the more, natural resources that we're able to extract in a renewable, regenerative way, the more that we can do. Like toward the end of the book, I talk about Derek Thompson's abundance mindset, and he's an incredible journalist. And
With The Atlantic.
right, yes, and he wrote his own book as well, and he just talks about like we can do these things, like we can have more housing, we can have immigration in a way that's super beneficial, we can have green energy, like we can do these things.
Right.
And so I think that's kind of like what we have to shift to is right now where the economy is in total scarcity mode. We're exiting a massive inflationary period, we're dealing with a lot of labor market tension. The economy is still growing, but like there's not enough housing, there's not enough labor, there's not enough renewable energy that we can rely on. And so we are existing in this scarcity. And I think the questions that we should be asking is, well, how do we transition to abundance? And it sounds very woo. And even as I say it out loud, I'm like, okay, like, but I think these are like real things that we can consider. But like what you were saying earlier, we have these monkey brains that are like, no, it's too scary, right?
Well, what you're talking about is mindset there, right?
Yeah,
like scarcity versus abundance. But what I think about there is like the stock market. I think about the quarterly returns that we ask of companies and the short-term focus on growth at all costs. And that is within the economy, but separate from the economy, right? It's its own set of problems that we could solve differently.
Yeah. As Kai Ristel of Marketplace always says, the stock market is not the economy, and that's true. The two do inform each other, though. Like how corporations perform will inform how the economy performs, and likewise, right? And so I think that, yeah, like the stock market is kind of disconnected from reality right now. Like you just have a lot of exuberance, especially around AI and semiconductors. But yeah, it shows that there is the possibility to believe with a lot of money. Like these companies are huge. I think it's 1 in every or 2 in every 3 NVIDIA employees are now millionaires. Have you seen that statistic?
I mean, it is off the charts.
It's
and then you
huge.
just look at the outsized performance of the tech companies supporting AI relative to the other companies in the S&P 500, right?
Yeah.
I want to talk a second about growth. We worship growth, right? To what extent is growth important for a healthy economy, and how should we think about it?
Yeah, I mean, I think growth is always a balance. So when we talk about the federal debt, like a lot of people are really worried about U.S. debt. They're like, look at the U.S. debt clock. You can see it tick up by thousands and hundreds of
You
thousands.
want to stress yourself
Oh, it's
out.
awful. The way that we kind of manage the U.S. debt situation is by growing the economy, by like doing productive investments like the CHIPS Act, the IRA, the IIJA. And those were all, these big federal ideas that were passed, and they created jobs, and they've added manufacturing to the economy. And that's a good use of money, right? Like growth is really important there.
Right.
But growth at any cost, which is kind of when we were talking about the stock market, that's what we see over there a little bit more.
Yeah.
That's no longer as sustainable as it used to be, especially now that interest rates are so high. It's much more expensive to grow at any cost because money is expensive.
Right.
And so you see these companies that were like high flyers during the pandemic having a really hard time. And so I think that's like the more mechanical way to think about growth. But then I think as a society, like we have to think about what we want to grow and like why we're growing it.
Yeah.
And so when we talk about the housing crisis, right, just as an example, it's really good to build more homes. It's good to grow. We have a housing shortage, but we also have to talk about insurance. Like we cannot just kind of go crazy and do all of these things. Like we kind of have to proceed carefully now. That's how I talk about growth. Yeah.
Talk about that a little bit more. How do you mean proceed carefully?
So with insurance, for example, you can't have a mortgage if you don't have home insurance.
Mm-mm.
And California, Louisiana, and Florida, private insurers have totally just backed
They're
out.
done.
Yeah.
It's like, this is nuts.
Yeah, but a lot of people live there,
Right.
right? And so it's very tough to get a mortgage if you don't have insurance. You can't have one, actually. And it's very tough to get insurance right now. And
Right.
so, like, a big part of what needs to happen over the next few years is we have to build more housing, but we also have to talk about insurance. Like, we kind of have to do the boring things alongside the big fun things, right?
Right. Let's pretend that insurance isn't boring for a second,
Oh,
though,
it's
because
not. I
the
love
The
insurance.
question of how it is that we protect ourselves from the disasters that are just most certainly ahead of us. That's a reasonable question to be asked. A pretty exciting question, actually.
I think it's great. Yeah. I mean,
Yeah.
I think it's just good to think about. So I'm like, why aren't we like talking about this? And like, of course,
Yeah.
people are talking about it. But
Yeah.
I mean, I think the thing is like now the government is going
Yeah.
to have to step in,
Right.
and the government is probably going to have to backstop this. And America has been so wealthy that we've been able to exist in a state of delusion for a very long time about where we can live. And the coasts are eroding, right?
Right.
Natural disasters are happening at a much higher rate. We had 3 natural disasters in the 1980s, adjusted for inflation, that costed more than $1 billion. We had 28 in 2023.
Wow.
Yeah.
That year alone
Mm.
compared to the
Yeah,
decade.
big shift.
Yeah.
And even adjusted for population growth, it's still like 1.3 per 100 million people
Right.
versus like 8.33 per.
Right.
Yeah. And so it's happening at an increased rate. And inflation has impacted insurers too. It's very expensive labor-wise, material-wise. Reinsurers, those who insure the insurance companies, have
Right.
raised their rates. And so like that's a big part of owning a home is having insurance unless you pay cash. And so now it's like, well, the government have to step in.
Right.
And also, like, is this a deterioration of the American dream? Like, do we have to think about home ownership differently? And so, like, we kind of have to ask these big questions. I think we're just at this turning point, you know?
Well, it's like the big questions have actually been on the table, and
Yeah.
your generation is forced to answer them differently than mine, right? I cannot rewrite the narrative inside me that says that home ownership is the first step to a safe adulthood,
Yeah.
right? When in fact, for somebody perhaps thinking about buying now, there are probably many safer things you can do with your money,
Yeah. Well,
right?
and this is true. Like my favorite graph is the distribution of financial assets from the Federal Reserve,
Right.
and it shows wealth breakdown by decile. And so you can look at the bottom 50% and all of their wealth is in real estate, because that, you're right. Like people are like, okay, if I'm ever going to make money, it's going to be in this house here.
Yeah.
But when you look at the top 10%, it's equity ownership and businesses. So they own stocks and they probably have a small business or something bigger. And
Right.
I think that's like what we have to shift to is like, okay, so people need to have exposure to the stock market. I think only 62% of Americans have exposure, and usually it's through a 401k. And then also we have to think about business
Can
ownership
I ask you
differently.
something? I probably should know this, but I don't. Is 62% more or less than, say, 50 years ago? Well, 20 years ago.
It's more because
Yeah.
now we have the 401k, and it's
Sure.
just, it's much easier.
Yeah.
You know, apps like Robinhood have democratized investing, but it's still concentrated at people who are white, making over $100,000 a year,
Sure.
you know, older demographic usually. And so 62% of Americans do own stocks, but it's not evenly distributed.
Got it. But I do want to sort of bring us around and tie this all together by talking a little bit about this idea of the American dream.
Yeah.
What do you think of the American dream?
Well, I mean, I think that it's essentially the way I always talk about it is like 2.5 kids in a house, right? Like the white picket fence ideal is sort
Sure.
of the American dream. And you have issues with home ownership because of the housing shortage. In some states, you can't get insurance. Childcare costs are up 32% since 2019.
Do you know how expensive 2.5 kids is?
I imagine it's really, I don't
Yeah,
have kids.
Yeah. I didn't mean that literally, although I will tell you in New York it's particularly expensive, but just generally the cost of raising children for families is prohibitive at this
I
point.
mean, I think it's over $100,000 by
Yeah.
the time they leave.
Right.
And this is the other thing is like the average kid now leaves at 26 versus leaving at 23 in the 1990s.
Right.
And so the American dream has become sort of morphed where it's like, okay, for me, it's like, well, maybe I can own a home one day, but it's going to be tough. Like 1 in 4 Gen Z do own homes, but 78% of them got help from their parents with the down payment and maybe the house itself. And that's not something that's available to a lot of people. And then on the other end, it's like, okay, so I want to have kids. Like, how am I going to pay for that?
Yeah.
Like childcare is, I think, $2,000 a month on average or something very high.
Yeah.
And then the sandwich generation is going to become an increasingly large problem because we have an aging demographic. The fertility rate is below the replacement rate. We're just not having enough kids. I sound really like doomer right now, but these are points of concern. Yeah.
Well, so to come back to your own story, Kyla, what do you want in your future, and how do you think about your goals? Do you have too much information to answer that question?
I do have a lot of information on my head. I'm like, statistics. But yeah, I mean, I think for me, like, I think that educating people about economics is really important. And for whatever reason, people have resonated with the videos and the style that I do it in. And so I just kind of want to keep on helping people through this journey. I want to do deeper help as well, like personal finance, like what does it look like to invest. I proposed some opportunities at the end of the book, and I want to spend more time, actually fixing stuff versus talking about stuff. And so that's kind of my goal over the next 5 or so years, is to build things versus just talking about them. Yeah.
I love that.
Yeah.
That was Kyla Scanlon. She's an economist and a content creator. You can find a lot of her work on YouTube. You can find her book wherever you buy books. And you should really take a few minutes to listen to her conversation earlier this year with Ezra Klein on his show. It was great. There's so much that I'm going to take away from today's conversation. I hope you'll hold it close as well. First of all, this whole idea, right, that economics is about people. Right? You can break all of the terms down into very accessible ideas when you keep that front of mind. Second, to address the current economic problems around us everywhere, we are going to have to summon a position of abundance. Too often we're coming at them through a lens of scarcity, fear. Instead, we need to look for solutions to our problems, and economics can provide a language, a path to those solutions. Finally, and I really loved this, Kyla convinces us that economics can be really beautiful. At its core, it's about person-to-person interactions, right? Societal relationships. It's about trust, how we restore it, and how we build it. We're going to be talking about all of this and so much more this week on Office Hours. If you haven't come yet, well, maybe this is the week you should start. You can always find me and our senior producer, Sarah Storm, on Wednesday afternoons at 3 p.m. Eastern, going live from the LinkedIn news page. Now, if you have trouble getting to us, check the show notes, because we'll drop a link. Thanks for joining us for this week's episode of Hello Monday. Be right back in the studio next week with a fresh conversation. Hello Monday is a production of LinkedIn News. Lolia Briggs and Rachel Karp produce our show. Sarah Storm is our senior producer. Sound design and engineering by Asaf Gadron. Our theme music was composed just for us by the mysterious Breakmaster Cylinder. Our contributors, Michaela Greer and Victoria Taylor, are masters of supply and demand. Dave Pond is head of news production. Courtney Coop is head of original programming. Dan Roth is the editor-in-chief of LinkedIn. I'm Jessi Hempel. We'll be back next Monday. Thanks for listening.